This is my first attempt to teach basic tax prep, whether for regular people or accounting students or maybe even entry-level accountants. So there's going to be some assumptions here. The assumptions are you're only going to be receiving government tax forms such as W-2s, 1099 interest, 1099 dividends, and you're also a resident of Arizona, California, Nevada, or a state without state income tax, because the worksheet I'm going to show you only has the states Arizona and California with it, or state of Nevada or a state that has no income tax. And this also assumes that your dependents are under the age of 17, and they are your dependents. You had no child care for the year, and your income is less than 200 grand if you're single and 400 grand if you're married filing jointly. The reason for that is once you get over those amounts, there's some income limitations of certain tax things that the worksheet doesn't really show you. And then it also assumes that the standard deduction is taken. The other alternative is itemized deductions, which my worksheet could do. I haven't played around with it enough where all the formulas will work. So I'm just going to stick with just standard deductions and keep it super basic. So there's only 4, 5, 6, 7, 8, 9, 10. So there's 10 tabs, but really you're only going to be using probably 8 of them. And so usually you're going to start off with W-2 wages. This assumes most people have them. You're going to put the employer here. I already filled this out, so this is assuming a married filing jointly couple. I label these box 1, box 2, box 5, box 16, box 17 of like where these numbers are coming from. And the first person has $50,000 of income. Their withholding is $5,000 for federal. This is their Medicare wages. Typically doesn't affect your Medicare at all. I think unless it goes up to 250, then it has a formula in here. So let's just keep this what it was. You can also change this to, and then blue is a formula, green is kind of what you would manually input. So this one assumes this is California. California, same wages. State withholding is $2,500. Assumed interest from 2 banks, $25 and $50. No IRAs or pensions, no Social Security benefits. This would be where you fill out for your itemized deductions, but like I said, on the assumptions is they're taking the standard deduction. The standard deduction is going to be the higher of the total of your itemized deductions or the freebie standard deduction. And this for tax year 2025. So in this scenario, we're just assuming $31,500. For California, we're assuming $11,412. This payments tab shows you what you paid for federal versus California. This one doesn't really matter. I don't know, I have it in there. This is if you did Arizona. So Arizona is pretty straightforward, but this one we're doing for California. So once you enter all that stuff in, so we had W-2 wages, interest, and that's it. So this is a pretty basic return. This also assumes this person married filing jointly, tax year is 2025, and they have 2 dependents. And both these dependents are under the age of 17 at the end of this tax year. So this should look like the first page of a 1040 tax return. You have $150,000 of total W-2 wages, $75 of interest, total income $150,075. We took the freebie standard deduction. So your taxable income, what the IRS uses to determine your taxes, is $118,575. And this little formula box shows you how it's calculated. So when people talk about the effective tax rate, this is what they're talking about. It's essentially the average of the tax rate, which is the tax divided by the taxable income. So average about 13.4%, but your tax rate is in the 22% tax bracket. So we have a progressive tax bracket. Certain amount of money is at 10%, certain amount of money is at 12%, certain chunk is at 22%. So these are the chunks depending if you're single, married, filing jointly, or head of household. So between 0 and 23,850 is going to be taxed at 10%. $23,851 to $96,950, which is the difference between $73,100, is taxed at 12%. And then these amounts are at 22, and obviously that's how the chart goes. So this breaks down what each chunk of money is getting taxed at. The total is still $118,575. So your marginal tax bracket is 22%, but your effective tax rate is 13.42%. This is a formula. 2 kids at $2,200 for a child tax credit. So $15,915 minus $4,400. Now your total tax $11,515. We assume $15,000 were withheld from your paychecks based off of this column. And so therefore this person should get a refund of $3,485 from the IRS or from the federal level. Now at the state level, it starts with a federal adjusted gross income. The standard deduction we talked about earlier is $11,412, and the taxable income is $138,663. Same type of progressive tax table that I created. Each in chunks, so the marginal tax rate is 8%. The effective tax rate is 4.23%. There's some exemption credits based off of 2 people and 2 dependents. So the total tax is $4,605. We assume $700 in state tax payments made, which is this column. And therefore you should get a refund of $2,895. And let's just assume this was an Arizona resident. Then you would look at this tab, start off with the same federal adjusted gross income. Arizona takes the federal standard deduction. Charitable contributions, we also assume $500 of charitable contribution. And that's important because I'm going to be doing one for 2026 right after this, just kind of show the comparison. And so if you want to play around with this worksheet, you can input your 2025 tax information on here, see if it matches what your actual tax return was. So for Arizona, so you get 34% of your charitable contributions, which was $500 right here. Taxable income for Arizona is $118,405. Arizona has a fixed flat rate of 2.5%. So that's their tax. We assume 2 dependents under the age of 17, $200 credit. Net tax is $2,760. We assume the same payments for the state at $7,500. So you get a refund of $4,740. So that's 2025. I did the exact same numbers for 2026, just to kind of show the difference. Same thing, W-2 wages, whether it's California or Arizona, doesn't really matter. Same interest, no IRA, no Social Security, $500 donation. These are the payments. So one thing that is going to be different is that in 2026, charitable contributions, even if you don't, normally you have to itemize your taxes in order to be able to take your charitable contribution. But for 2026, if you're single, you can take up to $1,000 of charitable contribution. If you're married, you can take up to $2,000 of charitable contributions without having to itemize your amounts. So that's why you see this $500 here. So it's going to be $500 lower. The standard deduction is a little bit higher in 2026. Taxable income is $117,000. Same type of formula over here. Effective tax rate is 12.99, which is lower than the 13.4. Effective tax rate is still 22%, but not as much of it is getting taxed at 22%. The child tax credit is, I believe, still $2,200 for 2026. Total tax $10,847. We assume the same payments, so you get a refund of $4,153. If you're in the state of California, standard deduction was the same. Tax falls the same table here. Tax is $45.65, and we assume payment $7,500. Refund of $2,935. Arizona, Standard deduction is a little bit higher. The federal adjusted gross income is a little bit lower due to that $500. Same, this actually should be 34% for this 170. Flat tax rate of 2.5%, depending tax credit of $200. Tax at $2,730, payments assumed at $7,500, refund of $4,770. So this is going to be either or. You're either an Arizona resident or a California resident. Of course, if you're Nevada resident or a state that has no state income tax, there's going to be only tax you pay is going to be for federal. So hopefully this helps. Both these worksheets should be in, if it's on LinkedIn, it should be on there. And if not, it should be in, I don't know, the description of the YouTube. Let me know if you have any questions or if these worksheets weren't helpful or maybe there's some incorrect formulas. So this is my first attempt at this, and I'll obviously improve it. But the goal is that people should understand just the basics of this, whether you're just a regular person or an accounting student or an entry-level accountant.